In today's video, we're going to be looking at price action trading. Hello and welcome to another ACY Securities tutorial. My name is Alistair Schultz and I'm going to be your host through today's trading journey. In today's video, we're going to be focusing on price action trading. But what is price action trading to really get it started? It's really the movement of a security's price if we look at just the first two components of the whole sentence, which is price action itself. In simple terms, it's really just a way of reading the market. Of course, price action trading has more of a systematic approach to trading. It's not just one piece or component of this. You can look at price action and consider that to be a method of reading, just like you would the alphabet, but in this case about price and time, versus actually looking at price action trading, which is a systematic approach to trading the markets. It does, however, have psychological and behavioral components attached to it as well. The idea that the more people you teach price action markets to, and of course, some of the patterns that might be associated with it, will eventually mean that a lot of people will learn the same patterns, and therefore a psychological effect will occur in the market pricing, showing that people will see a pattern and start to actually place trades and change their behavior around what they're actually doing at the time. So it is a little bit of a discretionary approach, but it can be rule driven as well. Now, looking at some of the stuff to get into price action trading and what some of my 5 tips are, I have to say the first thing is practice. But not just practice on its own, because as we know, you can say practice makes perfect, but reality, perfect practice makes perfect, right? So in this instance, practice without indicators and then practice it a lot. On average, I think over the years of trading, when I first started looking at price action trading more than a decade ago, I was seriously probably looking at about 1,000 patterns at a time before I tried to look at them in a live context. So it does make a huge difference on being able to identify what you're actually looking for in the charts, and of course, acting on it and getting that experience and obviously feeling comfortable with some of the actions that you might take by placing the trade. Now, the important part is still to this day, if I am planning on doing some price action trading and I'm going to be doing it in a live environment, particularly if I'm going to be focusing on smaller time frames and doing some of the scalping sort of side of things, then I always try and get my eye in before I start trading live. So I'll sit down for perhaps 20 minutes to an hour with a demo account, put it on the shortest time frame available to me, and I will start trading candlesticks or price bars, whatever it may be that you use. But I will always do that for a little while just to get my eye in for the day. Generally speaking, when you do look at doing price action tradings, particularly on shorter time frames, you really are limited in how much attention and focus you can dedicate to it. Anything after about 2 hours, you start to get a little bit foggy, your reaction time's not as quick, and you tend to miss things after that stage. So, make sure you're aware of those focus times. It's also important to look for the support and resistance. You're better off looking for a trade around support and resistance than you are in the middle of nowhere. Of course, the next piece is stick to the trends. If you've got a longer term trend, stick trading with it. If you're long in that long-term trend, then take long trades. Don't be going counter trends. And keep the math really simple. When it comes to this sort of things, you have a moment's notice sometimes to place a trade. Obviously, the longer the time frame, the more time available that you have to be able to do some of the calculations you need to do. But if you are trading this on smaller time frames, in the 5-minute and below, or even the 15-minute and below where time is critical in when you place your trade, then keep the math really simple. Use a simple risk-reward system. Don't overcomplicate it. Know where you're going to be going into when it comes to your trades. Now, the next bit is what skills should you really be focusing on when it comes to price action trading? In my mind, I think the first place everyone should be starting is being able to identify a trend. It's probably the most important aspect. Obviously, incorporate into that identifying the phases of the market, whether you're consolidating, trending, or anything in between. All of that is going to be incredibly important to be able to get in the right direction to begin with. Then you need to be able to identify some of those swing lows and swing highs going through that trend. So make sure you can understand where you might find an opportunity to actually get into a position. Obviously, finding that support and resistance and the consolidation is heavily implied through your trading when it comes to identifying trends. It'll help you identify where maybe you've got an area of significance and allow you to start looking for things such as reversal patterns and continuation patterns off those swing highs and swing lows. So everything kind of groups together in this instance. Of course, you can also pay a lot more attention to breakouts. Now, if I was going to give you guys somewhere to sort of start with when it looks with all where you know you're going to stick with your trends, the next place you're going to be looking is your swing high, swing lows. If you're wanting a reversal pattern, then I'd have to suggest looking at double tops, head and shoulders, and double bottoms, all those style of reversal patterns, because they are plentiful when it comes to practice time. And when you get into a live environment, if you've identified more than 1,000 of them, then you will likely find it much easier in real live trading. So keep an eye on all of those things. The same applies to breakouts. If you're not used to breakouts, practice it. Spend a lot of time with it. Work out what the best format is for you to be trying to address these sort of trades, and then put them into practice. That's really a trial and error sort of scenario depending on each person. Unfortunately, when it does come to this style of trading, price action trading, it is a bit of an art form and there is a little bit of discretion that's involved, but ultimately you will find that your observations will be different to another person's. So the more you do it, the more you practice with it, the more success you have with it, the better off you're going to be. Now, moving on, why is it better than indicators? Well, this is kind of a blanket statement that we hear a lot, and you'll quite often see it in online forums and general discussion between two different types of traders, where they'll say, oh, well, but you know, in indicators you get a bit of a help or guiding hand, it's simpler to use, and then the price action trader will be like, yeah, but that's lagging indicator. The real answer to this is that you can use one or the other, but you should be using both at the same time. To me, if I had to pick between the two, I would be saying that price action trading has got better skill sets required to be able to use it and perform it. It's also not lagging. You're taking advantage of current price as well as past price. Whereas when you use an indicator or something along the lines that would be giving you lagging information, then you are obviously making a delayed decision. So you might find that the price action trader will get in earlier and get out earlier when they see an obvious signal that the market is changing, reversing, or continuing. So all of those take into account. Whereas when you look at the indicator side of things, then you might find that you are already a little bit too late on your entries and your exits at a reasonable point in time. So quite often, what you'll find in a lot of technical analysts is that they will actually use a combination of both. They will employ some indicators to help them get a guide for where they might be going, giving it that simpler fact. And then when it's time to actually place a trade, they will switch hats and move down into the idea of price action trading and start analyzing the candles or the bars themselves. Of course, it also can be employed by those that might be more on the fundamental side, like myself. I will think about what's going on in the market, take a fundamentalist approach, and then when it comes time to actually place my trade, just to try and find the best entry, I will use a little bit of price action trading. Now, it's not always necessary, but it does help sometimes. So bear in mind that when you do this, it will help you look for some of those support and resistance points. It'll give you an idea of important barriers to price as well. So you do get a lot of benefit out of being able to read these charts, and particularly if you do it naked. Not physically, but I mean the actual chart naked. So bear that in mind. Of course, do whatever floats your boat. Now, moving on from that, what is the best time to actually be using? So if you've got time frames, we've got a lot at our disposal. In my like side of things, I tend to prefer the 1 hours, the 4 hours, and the daily charts. But truth be told, any time frame will actually work. It really depends on what you're aiming to achieve with it and what you're doing with the time frame itself. So if you are planning or you trade generally on shorter time frames, you've got more of that scalping side to you, and you've practiced a lot with that side of things, then obviously you're not going to use some of the time frames that I use. But please note that no matter what time frame you are actually looking at, whether it's a monthly or it's all the way down to tick data, you can actually use price action trading to be able to read a chart. So at the very least, the benefit is you'll be able to read and identify where the trends, where the swing highs and swing lows, and where some of the support and resistance might be. In which case, when you move down your time frames, you'll be able to see some of those areas that you've put in place already. Now, that's all there is for today's video. I hope you have enjoyed it. Of course, if you have any questions, please feel free to get in contact with me via any of my socials, or simply send me an email at talktoal@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.